Watching Black Box Trading. Um, we're getting the breakout. So if you watched our previous shows, we mentioned over a week ago now that we were approaching a key resistance point that in the event that we would break this downward sloping line of resistance, we would likely see a move that would uh, reach at least 100K. And we're starting to break that resistance. Now, the volume hasn't come in yet. Credit to the bears, or credit to the lack of presence in the bulls. More accurately, we haven't seen that follow through. We haven't seen the volume come in, but I'm going to, double down on the thesis and lead you through what I think is the next move up. And I think the low is in. I think that $80,000 was the low for Bitcoin. And I'm going to explain to you how I think that we're approaching a rally that will at least hit $108,000. So without any further ado, let's dive in. Let's take a look at the king of all crypto, and that is Bitcoin. Just a few housekeeping things here before we get started. Nothing here is financial advice. I am not your financial advisor. These are my own opinions. I have been trading the cryptocurrency market for the better part of a decade. I know Bitcoin considerably well. I know crypto less well, but I know how to trade crypto no problem. My goal here is to not provide calls or signals or any sort of financial endorsement towards any given direction. I'm simply sharing my thesis. If you disagree, let me know what you think in the comments section. And yeah, without any further ado, let's get into things here. So here's what we're looking at. Let's get the zoomed out approach, taking a look at Bitcoin on the daily. So we mentioned this bump and run pattern. So a bump and run is when you have an established resistance point with multiple touch points, which then gets a large capitulation event, moving away from all of your simple moving averages and moving considerably away from the downward sloping line of resistance. You get a weak recovery, or just a low volume, low sentiment recovery up to the point of the resistance, at which you get a very quiet breakout. That's exactly what we're looking at right now. The market is still very, very afraid. Actually, if we go ahead and take a look at the fear and greed, I haven't taken a look at that in a while. Let's pull up fear and greed. Fear and greed, Bitcoin. We'll use Binance. We're still in fear. It's not extreme fear, but the market is still very bearish, and they are fearful. Be greedy when others are fearful. Be fearful when others are greedy. It's one of the oldest sayings out there. Warren Buffett. That's a quote from Warren Buffett, one of the best investors of our time. And yeah, so this is what we're looking at. Taking a look at the RSI, we have a large divergence here. You can see that we have a low and a higher low. Sorry, if we go with the close here, we have a low and an equal low. So it depends if you use Wix or not. If you use Wix, we don't have a divergence. So if you use Wix, we are convergent. So you can see with the low of the RSI, we have a higher low on the RSI. But if you use candle body closes, or you use line charts, we have a low on a support line and then an equal low, which is divergent from the RSI. I know some people are going to get nitpicky on that one. Let them be. There's no, rule to how you interpret the charts. When I'm looking for divergences, I'm looking at a support level. Sentiment is a great level for me to pay attention to. We're kind of in the general range of this area right here. Right here, this was the last area of the breakout into the rally into 126. When we drag that over, it's now holding as support. When you approach a support level and the lows disagree, you're seeing a divergence. When you approach a resistance level and the highs disagree, you are seeing a bearish divergence. So you can get really technical with it. You can be very strict with those parameters and say, well, this one's not quite as low, or that one's, or we're looking at exaggerated, which is not as bullish as a traditional bullish divergence. I don't care. When you approach a resistance point and the lows disagree, you're looking at a bullish divergence. All right. Now, going into the smaller time frames. So basically what we want to pay attention to is just this area right here. I want to monitor the breakout, the actual breakout here. So I'm going to go down to the 15-minute chart. I am in a short-term, highly leveraged trade right now on Bitcoin. Now, we're going to entertain the bullish side and we're going to entertain the bearish side. Okay, so we're on the 15-minute. I'm looking at this consolidation. Is this a distribution? Is this a small time frame distribution, which it has several characteristics that could lead us to believe that, yes, it is a distribution? Or is this just a sloppy, low volume accumulation? Because they can look different. If you're looking for, generally speaking, when you're looking at bullish patterns, whether it's an ascending triangle, whether it is a symmetrical triangle coming from an uptrend, whether it is a falling wedge, generally speaking, the higher the volume in that market, the cleaner the consolidation. So converse to that, the lower the volume, the messier the consolidation can look, and the less textbook the pattern will present. So with that in mind, let's kind of clean things up a little bit. Let's look at pure price action. Let's turn alphanumerics off. Let's turn off the trading sessions, and let's just look at this purely from a Wyckoff point of view. We are either identifying this as an upthrust and this as a UTAD or another upthrust, and we're on high alert for this move here to see if this ends up being an upthrust as well. For the Wyckoff uninitiated, what an upthrust is, it's when you have a trading range. We have our trading range here, and price looks as though it's breaking out and it fails back inside. Okay, so it's a fake out breakout is what a upthrust is. So we had a fake out breakout here, we had a fake out breakout here, and now we're on high alert watching this area right here to see if this ends up being a fake out breakout. If this current move right here ends up coming back into the trading range and putting in a sign of weakness, which means taking out the low of the trading range, then it becomes increasingly probable that this small time frame consolidation is a distribution, and I would expect a rejection, maybe entirely, from this break of the downward sloping line of resistance, at which point we will need to adjust our downward sloping line of resistance to account for that rejection. But as it stands right now, it is breaking out, so we'll have to see. So that's the bearish case scenario, is we're watching out for that potential rejection on the smaller time frames, looking again here at the 15-minute to see if it ends up being an upthrust. Okay, now the bullish case scenario. So that's kind of looking at things from a Wyckoff point of view. Let's look at this more of a Wyckoff accumulation point of view. So in the accumulation, I'm actually going to change the trading range a little bit. I'm going to bring it up a little bit. And what we're looking at now is more of an accumulative structure. Now, we still have the upthrusts. We still had the price leave the trading range and get a rejection. But I want to take a closer look at the volume here. Now, generally speaking, again, you need to kind of loosen the parameters of your expectations when you're in a low volume environment. When you're in high volume, everything looks textbook. Everything is like if you opened up a textbook to a falling wedge or you opened up a textbook to an accumulation, it's going to look exactly the same because there's so much market participation that if something is an accumulation, it's going to present as accumulation. But when you're in low volume, low sentiment, just give yourself a little bit of wiggle room here. Like none of these strategies, none of these patterns are going to present perfectly all the time. So with that context in mind, I want to draw your attention to the volume. Now, we have this big gap in volume down here. You can see the lack of volume over here. We have high volume over here. We have high volume over here, low volume here, and again, high volume. Okay. If you're new to analyzing volume, I'm going to break it down really, really simply. Okay. So pay attention to this. This is probably the easiest way for you to understand volume. Volume is effort. Price is result. Never look at volume as a standalone indicator for anything. Volume and price are directly connected. What do I mean by that? So if you see price going up on low volume, what that is telling you is that it's easy for price to go up because it doesn't take very much effort to have the price of Bitcoin trend upwards. Volume is effort, price is result. Now, if you're up against a resistance point and all of a sudden you see a really large spike in volume and price stops trending upwards, what that's telling you is there's a lot of effort being applied to try and move the price up, and the price is unable to move any further. So because price can't move further, it's telling you that that effort is going towards selling. So you're anticipating a rejection. So a lot of people get volume really wrong. And they think that, you know, in any direction, you just want to see high volume. So when we're in a rally, you just want to see high volume. When you're shorting and it's breaking down, you just want to see high volume. No, volume is context because volume accounts for both the buyers and the sellers. So that's why it's important to bring that context. All right, I digress. That was just like a little crash course in volume. Let's go back to what we're seeing here. So this was weekend. Like this was very typical of what you would see in a weekend. This was a New York trading session. So you got a lot of volume here. But during the volume, you can kind of decide what your trading range is. Then we had a very, very tight consolidation. So we had low effort and low result. And what is the result? The result is neutral. We didn't go up. We didn't go down. So we know that Bitcoin is neither bullish. We know that the order book is not stacked bullish. Otherwise, it would tick up slowly. And we know that the order book is not stacked bearish. Otherwise, it would tick down slowly. So this is neutral, which is why we're looking at this as both a distribution and an accumulation to come up with a plan for both. Then you had volume come back in over here. What is the volume telling us? Well, we had a spike in volume over here, and that was a big rally. Then the volume died off, and we had another larger volume signature come in, and it moved price down really easily to the downside. So we had the effort being applied and the result. So high effort, high result. Sellers came in and it was easy to move the price down, which isn't surprising because of the neutrality of most of this consolidation. Bitcoin was neither bullish nor bearish. So if negative high volume selling comes in, you can expect a negative high volume push in price or a negative direction push in price. Then we have this, and this is where it gets interesting. This is where I start to lean more to the bullish side with Bitcoin, because what I'm seeing here is we went from neutral, we got a move up, that move was rejected on high volume, and now we're in low volume here, and Bitcoin ticked up. So what that tells me is this was the final bit of selling from the bears. This was that final, the sellers are now exhausted as far as what I believe this consolidation is telling us. Sellers are exhausted. We got this big spike in volume. Now we have low volume again, and the price naturally progressed to the upside. So it's easy to move Bitcoin up in price. Then we had a breakout. This breakout is correlated with what we're talking about here today. This move right here on the high time frames, the daily trend line break, low volume trend line break. We're not seeing a massive big candle here, but it has broken. And we're seeing the volume, high result to the upside. So I'm leaning bullish on this consolidation. is that's the the long and long side of things is I'm leaning bullish on this consolidation. I think that this breakout will become obvious to the rest of the market over the next 48 hours. Okay, so what can we expect for a move up? Now, oftentimes when you're coming off of a low from a deep retracement, a 30 plus retracement, a tool that's easy enough to use is the Fibonacci retracement. So we'll go from the all-time high here at 126,200, and we'll drag a Fibonacci down to the capitulation low. And Fibonacci, like volume, is not something that should ever be referenced as a standalone indicator. You need to pair it up with confluence. And when I am looking for achievable macro targets for Bitcoin, generally speaking, Bitcoin will ebb and flow above and below the 100 and multiple tests and test multiple times the 200. So as you can see, Bitcoin spends a couple months above the 100. It'll spend a month or two below the 100. It'll go multiple months above the 100. It'll go below the 100. This thick yellow line is the 100 simple moving average. It'll spend time above, below, and it's constantly going above and below that 100 simple moving average. We are currently below on low sentiment. We have a setup to get us back up to that 100. So we have two moving averages that I think are noteworthy, and they line up perfectly with Fibonacci retracement zones. So the 100 is currently sitting at the 0.5 Fibonacci zone, which is at $103, $460. This wave here that's kind of pale and harder to see is the 200 simple moving average. So the top of this wave is the 200 simple moving average. And that is up at that golden ratio of 0.618, currently at $108,000. So I think that in the event that this breakout confirms and we start to see volume flood back into the market as the market realizes that a trend line has indeed broken, and we take out some of these highs on the daily time frame closes. So let's say we take out 92.5 on a daily candle close. I really don't think that there's much in the way to prevent us from going to plus 100K. We would be up in this zone rather quickly in this golden pocket between the 0.5 and the 0.618. So $103,000 to $108,000. From there might be a consolidation. From there might be a large pullback. And then we will need to analyze the market again to decide, okay, was this a dead cat bounce? Was this a macro lower high? Or are we actually building a base here that can push us to a new all-time high? So we haven't crossed that bridge yet. Take it one space at a time. And what I'm thinking here is this is the local low, and we're getting ready to do that 100K move up. So that's what I'm thinking. Let me know in the comment section if you guys agree, if you think it's over. I want a sentiment check in the chat. Are you bullish? Are you bearish? Just put bull or bear, or put an emoji of a bull or a bear, or whatever you want to do. If I sound a little strange today, I'm fighting a bit of a cold, so bear with me if I have to like clear my throat or anything. Got a little bit of tickle in my sinus, and it's annoying. But yeah, let me know. Do you guys think the low is in? I'm sure a lot of my core audience is in agreement with me. That's why you watch. But I want to hear from the bears, and I want to hear why you think that we're bearish. Because when you look at all the fundamentals of the market, you got nothing but bullish things to look at. And the only bear case that's out there is that the 4-year cycle is intact. That's the only bear case. And sure, you can, assign values to a 4-year halving cycle, but Wall Street's in. Banks just got clarity on being able to custody and offer financial products that don't need to be backed one-to-one with dollars for crypto products. So they have standalone crypto products that they can push. We just ended quantitative tightening. we're just about to start quantitative easing. There's a lot of things that you can point to on the fundamental side that say bull market will continue. And all of the bears, all they have to say is just, oh, October 10th was the top. It came in right on time. That's the only argument, is that it just came in on time. Now, where does this 4-year cycle come from? It comes from the halvings, right? Every single halving is half as important as the last halving. Why? Because half the amount of new supply hits the market. Eventually, halvings will have zero effect whatsoever. Eventually, halvings will be so insignificant because the amount of Bitcoin hitting the market with fresh supply on a daily basis, having that supply will not matter. It will not matter. It's going to be so insignificant that nobody will care. So every halving is less important than the last, which means at some point it needs to not matter. So does it not matter today? Does it not matter at the next halving? Does it not matter at the halving after that or the halving after that? I don't know. But what is certain is eventually halvings won't matter. So could that be today? I don't know. Another thing that I've been looking at here is the global net liquidity. Global net liquidity is currently in a downtrend. Global net liquidity will eventually break this downtrend, and we will get some sort of an event like this. Now, this was an unprecedented event. I get it, because of, a global event that I'm not going to name here on YouTube. But, we had a break of a downtrend. And the moment that downtrend broke, the floodgates opened for money to become cheap again. Money has been expensive. It's been in contraction. It's been in this controlling phase where a lot of monetary expansion has been curtailed to try and strengthen the fundamentals of the economy. Because the reality is when you have an event like this, the price of everything goes up. The price of houses go up. The price of commodities go up. The price of stocks go up. The price of eggs go up. The price of gas goes up. The price of your rent goes up. Literally everything goes up when you have this type of expansion. So it's a double-edged sword. Those that hold assets are very happy. Those that hold zero assets are experiencing hardship. But this will break again. It's a guarantee, because if there's one thing I know about governments, is they're addicted to spending. It's a mathematical problem that cannot be solved by any other means than issuing new currency, debasing the currency, the debasement trade, as it's now been popularized. So this is a certainty. This is a absolute mathematical certainty. It's not a matter of if, it's a matter of when. So when this breaks to the upside, when you see global net liquidity break this downtrend, that's going to be a massive, massive signal to the market. And what that signal will be telling everybody, doesn't matter what you're into, doesn't matter if you're into Bitcoin, doesn't matter if you're into real estate, doesn't matter if you're, building houses out of lumber, like, it doesn't matter. What that will signal is it's time to go, because shit is going to get expensive. So if you're not holding something, you're going to have to get your hands on it ASAP. So that's kind of what I'm waiting for to kick off the bull market. I don't think we've been in a bull market. Yes, Bitcoin's price has gone up considerably, from the bear market lows to where we are right now. It's 400%. It's nothing to shake a stick at. It's not nothing, 420%. And from the macro highs of 126, it was 650%. But that was in the face of this contraction of money supply. And Bitcoin is the most reflexive asset in the face of monetary policy. So in the face of a contractionary monetary policy, Bitcoin did 650%. I can't even imagine what it's going to do when the monetary policy does flip favorable for assets. So I don't know where the bear case is coming from, apart from just, 4-year cycle. Eventually that won't matter. Unless this time is a different top was October according to the cycle time. There it is. There it is. Also looks like a Wyckoff distribution with a UTAD, bearish dibs, divs, bearish MSS. I don't know what MSS is. Yes, you're right. And it did confirm. It confirmed a top UTAD, bearish distribution. That's because distribution was taking place. Distribution does not mean end of cycle. Distribution just means that old shares are selling to new shares, which that's a massive narrative that nobody is in any argument of. You ask any, Bitcoiner out there, what's going on with the price of Bitcoin? They're probably all going to say the same thing. OG whales are selling. So if OG whales are selling to institutions, you're going to see distributions because that's exactly what's going on. The coins are being distributed. But it doesn't mean the end of the cycle. With Bitcoin, the end of the cycle is usually a blow off top, some sort of parabolic move that just captures the world's attention, captures the hearts of many, and you get these blow off tops, massive, massive rally into peak retail euphoria, and then a long, drawn out, very deep 70+% retracement bear market. Without that retail FOMO coming into the market, in my opinion, the top's not in. And if you think that this was a retail FOMO market environment, then you've basically forgotten what those feel like. You didn't have your friends and family calling you. You didn't have Bitcoin all over the news. You didn't have Dogecoin being, shilled on Saturday Night Live. You didn't have massive news articles being written about the price of Bitcoin. In fact, the entire 650% rally in Bitcoin was pretty darn quiet. Very quiet, in my opinion. It just did not reach retail mania. Now, part of that is the fact that retail's broke, right? Retail is broke. So Bitcoin didn't rally enough to suck them back in. And I think with this setup right here, with net global liquidity poised for a breakout, it hasn't happened yet. This can totally reject. This could take months. We don't know. This could take a year. We don't know. This can keep heading down for multiple years. I don't think it will, but it could. The moment this condition happens, I don't care how broke you are. People are going to buy it. They're going to buy it because Bitcoin is going to be moving so fast and it's going to look like such a sure thing that people will not be able to help themselves but buy Bitcoin. And it's only at that point that you're going to have that top come in. Could be wrong, the on one hand, I'm saying this time is different with the length of the cycle. On the other hand, I'm saying everything's exactly the same in the sense that retail needs to put in the top and retail hasn't. All right. Tea Time's bullish. Birdie Matt is bullish. All right, let's take a quick peek at altcoin rotation. It's not the time for altcoins. It's not. But we monitor the rotation. Because when this finally does curl over, let's put an alarm on here actually. It's going to signal the beginning of a 30x. Isn't this time different? The worst thing an investor / trader can say? Well, okay. First of all, we had an all-time high break prior to the halving. So this time is different. Secondly, we had ETFs and institutions come in with retail not here at all for the majority of things. So this time is different. This time is different looking back. I'm not looking forwards and saying this time is different. I'm looking backwards. I'm looking to what we've already seen. You can see time and time again that this cycle is different. Bitcoin has been going up in the face of monetary contraction. So It's going up against monetary policy. That's different. We got an all-time high prior to the halving. That's different. This is not a retail-driven market. That's different. How many more things do you need to see to conclude that this cycle in Bitcoin is different from the prior cycles that we've had? It is different. So at some point, you do need to adjust. And, with the bearish side of things, people are, I'm always counter narrative. I'm always counter narrative. So when everybody agrees on the this time is different thing, which the whole market is like, well, this time is different is the most dangerous thing. I'm making fun of you here, but it's a common thing that I see everywhere in the market currently. When the herd is saying it, I don't listen to the herd. Basically, long story short, when the vast majority of people are parroting the same thing, I will counter trade that. And because everybody is saying the top is in because this time is not different, then it leads me to think that maybe this time is different. And I give a higher probability to this time is different, because when you look objectively to certain things that Bitcoin is used to behaving in certain contexts, it's hard to argue that this time is the same. Yo, hello, Baloo the Bear. Welcome in. But you're right. It is generally advice to shy away from. But it's a crowded trade at this point, so I'm going to take the other side. I'm going to take the other side of that crowded trade. All right, let's... So, yeah, we're waiting for a curling over. Until we take this line out, it's not altcoin season. I got a little ahead of myself calling this level the beginning, which it was. That's when altcoins started to wake up, but they weren't done losing value. So against Bitcoin. So we're going to wait for this curling over. And then when this curling over happens, that's when you're going to get the 30x in the portfolio. Let's take a look at MSTR. We did call a bottom on MSTR. Let's see if that's holding true. I don't know that it is. It's right at where we called the bottom. So it is still trending downwards. Massive bullish divergence, though. Bullish divergence. Low, lower low, low, higher low. Currently a bullish divergence. That can change. But yeah, I think the low is in for MSTR. And just look at the divergence between the slow moving average and the fast moving averages. They are so far apart. Anytime you see a massive divergence in either direction, when you see a massive gap between the fast and the low moving average, you get a snapback, right? We got a divergence here, snapback. Divergence here, snapback. We've got a large divergence here, so I'm expecting a snapback. What's Matt's opinion on the current cycle? Couldn't tell you. Couldn't tell you. Don't care. We are... The best advice that I can give to anybody who's trying to learn how to trade is don't listen to anybody. Don't listen to me. Take what I'm saying and use it as a tool to form your own opinion. If you want to counter trade me, counter trade me. If you agree with me, take what I'm taking into consideration and formulate a plan on how you want to position your portfolio. I don't listen to Tone. I don't listen to Matt, because nobody's batting 100, including myself. I don't bat 100. Nobody bats 100. Nobody is always right all the time. Matt's been wrong on numerous occasions. Matt's been right on numerous occasions. I've been right on numerous occasions. I've been wrong on numerous occasions. But one thing that I feel that I'm really good at is understanding the lows when attached to sentiment. That's a strong suit of mine. And I'm not going against Matt, Matt is just following his technical rules. And I think that I would be participating in the lows sooner than Matt would be participating in the lows. Matt has a plan for when his bias flips, and when his bias flips, great, his bias will flip. But I've been pretty darn good at spotting the lows. Not so great at getting the highs, but when you're nailing the lows, the highs don't matter because lows come in over weeks or months, highs come in over days. So trying to peg the tops, it's a pretty monumental feat. Where you really get a lot of the value is nailing those lows. And, I think I'm pretty darn good at that. All right. How long we've been rolling here? Does it say? Oh, it doesn't say. Oh, yeah, it does. 35 minutes. Let's take a look at total market cap. And then if you guys want me to take a look at any individual projects, even though I've made it clear that I don't think it's time for altcoins, but we can take a look and come up with some plans. You can spam your tickers and we'll see. But let's take a look at total. Let's turn alphanumerics off. And this isn't great. So I think we talked about this last time, saying that getting below this line is not a signal of strength. And we're below this line. We can adjust the lines a little bit, but still, I don't know. I guess you had that crash down here. There's a couple touch points, but I don't want to manipulate it too much. Let's go back to the weekly. So oftentimes when you're looking at, you'll line up the bodies. We're losing it on the bodies. That's not good. But we can also line up the wicks, and that gives us a lot more room, but it's almost too much because this move down here from here to here, that's a big move down. That's another impulse move. So that would be Bitcoin losing its current support level, and that would be a lot of the altcoins also losing their support level. So definitely need to be on high alert here. We did come close. This could reverse, but like I said, altcoins are not in a position of strength. They are just not. Full stop. If you're an altcoin investor, I hope you're positioning very low, because it's not the right condition for you to be positioning high. No large allocations into altcoins, and we've maintained that for years. There will be a time when we have that rotation, but yeah, it's just weak. It's weak. There's no sugarcoating it. It's weak. Alts are weak. Bitcoin is exponentially stronger than altcoins, and Bitcoin doesn't look fabulous. So yeah, being an altcoin investor has been tough. And I think that goes back to what I said earlier, where retail hasn't been here this cycle. It's been an institutionally driven cycle. Retail carries the altcoins. Institutions don't give a shit about altcoins. And there's too many of them. There's like 10 million altcoins now. So the institutions really don't care about that. And they're positioning in Bitcoin, and they're dabbling very, very lightly with some of the higher market cap ones like Ethereum, Solana, somebody mentioning Cardano. You could argue that some Cardano's in there, and XRP, like only the massive ones. But there are so many other cryptos that it's not surprising to see that this chart is struggling. All right, we got a request for ADA Cardano. Well, I don't know. Yeah, I mean, it just goes back to what I already said here. Until Bitcoin dominance crosses this threshold, until Bitcoin dominance falls below 57.5%, the alts are just going to look like shit. If you're a long-term accumulator, if you've been buying since 2022, and we're down here and you're not overexposed and you're looking for a place to allocate and you're already a Cardano bull, I think that this is as good a time as any to buy. It could keep going lower. That's what you got to be careful of at, like a move from here to say the middle of that support range is 40%. That's what you have to be careful of when you're down at the lows here. So the best way to mitigate that is through sizing. Always size appropriately. Know what your downside exposure is. And with an altcoin, your downside exposure is 0%. This thing can literally go to zero. So how much money are you willing to put into something that can go to zero? It's generally why I favor Bitcoin, because Bitcoin's not going to zero. So you can size larger, you can invest more into Bitcoin. Whereas Cardano, it's a much less certain future. But I do expect a bull market in 2026. I do expect that bull market to finally be retail driven. And in that context, I believe what we're looking at today would be close to the lows for Cardano. Not financial advice. You got to make your own decisions. I didn't pull this up. You did. You made the request. But this is as good a time as any. I mean, if you were buying at any point in this range during bullish times, there's no reason why you wouldn't want to be excited to accumulate in this range. And that's really the easiest way to look at it. TNK, speaking of absolute garbage cesspool shit, this is really, really low down the list for anything that you should be paying attention to. TNK, sure, have it on your watch list, but don't look at this chart. It's not doing anything anytime soon. I'm sorry, Birdie Matt, to be the bearer of bad news here, but this is at the far end of trickle down economics for retail driven manias. Right now, you need to see a rally in Bitcoin. When you see a rally in Bitcoin, you'll begin to see a rally in Ethereum, Solana, XRP, some of the major altcoins. Then you'll start to see Bitcoin dominance fall into that zone below 57.5% and begin to lose value as more liquidity moves into that sector, moves into the higher risk plays. And at the bottom of the list for those high risk plays are ordinals at the very bottom. So that means the high market cap coins need to go. Then you got your mid caps. Then you got your low caps. Then you got your micro caps. And then you have your ordinals. It's way down there. So what that means is I'm not saying that it's not going to go up. I'm just saying it's not going up anytime soon. We're talking like 6 to 12 months before you even need to pay attention to this chart again. It's got a long ways to go. That being said, it seems to be holding a general support range. If you wanted to add to the position now, like Cardano, is as good a time as any. But just make sure you're not overexposed to this kind of stuff. Ordinals as a whole shouldn't represent more than 2% of your entire portfolio. All ordinals. If you have 20 ordinals, those should not account for more than 2% of your entire portfolio, in my opinion. I do think that the ordinals will do well, but it'll take a long time for that to take effect. I have the same trend lines on multiple BTC charts, and none of them show a break above. Not sure why yours does. Well, there's a couple different ways of looking at it. Oh, we're getting a break below. How are we looking? Is this turning into a rejection? Got to be on high alert. Got to be on high alert here. For those who are bullish, this is a bullish entry. If you are bullish, if you are thinking this is accumulation, saying this live on stream right now, this is your entry right here. Boom. Like right now is your entry. If you're bearish, then this thing is going to just melt right through. So you can look at it a couple different ways. if we go here, if we take it from that tip to this tip, we've got further to go. If we go to the candle body close, it's already come through, retested, and it's bouncing off. I wanted to have one that was lining up the wicks and one that was lining up the bodies, but the bodies have already confirmed, so we're not getting a response off of that. So then I moved it over here, and I just wanted to see how things were doing in this general consolidation here. And I just lined it up on the wicks that had the most touch points, which just so happened to be here. So that's how I got there. Nothing's perfect. There's no science here. I think this could be a good entry. Have the trend lines starting at the peak using the wick. Yeah, and then you could also do at the body, having them start at the body, and then you end up in the same spot. But, you know, if you're lining up wick to wick like this one, let's get rid of this one. Oops, no, not get rid of this one. If you line up wick to wick, we haven't made it through. If you line up body to body, we're already through. So I'm kind of in no man's land. I'm in between the wick to wick and the body to body. I'm down here, lining up as many wicks as I can just to see the progress. Like I said, no science to it. All right. I think we're going to close things out there. It's about 45 minutes in. Yeah, let me know what you guys think. Let me know if you have any questions. Oh, don't forget to join the Discord, by the way. Join the Discord while it's still free. It won't be for much longer. So get in while the getting's good. And we have a lot of really cool tools that we're building in the background for you guys. So we're going to really build out the or the black trackers. We got a lot of stuff coming down the pipes, real tools that, you know, real traders, they often have to buy all of these different tools and put them together. We want to have a one-stop shop, a trading terminal hub that has literally everything you would need. So definitely stay tuned for that. Hit the like, hit the subscribe, do all the things. You know the internet. You've been here a while. And yeah, that's all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And until next time, please trade safe. It is a jungle out there. Peace.